This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices stabilized on Monday after losses last week as lower than expected U.S. inflation data offset investors' concerns about a supply surplus next year. Brent crude futures were down by 38 cents, or 0.52%, to $72.56 a barrel by 1300 GMT. U.S. West Texas Intermediate crude futures were down 34 cents, or 0.49%, to $69.12 per barrel. Oil prices rose in early trading after data on Friday that showed cooling U.S. inflation helped alleviate investors' concerns after the Federal Reserve interest rate cut last week. IG Markets analyst Tony Sycamore said.
Russia said on Monday the situation with European countries that buy its gas through a transit deal via Ukraine was very complicated and needs more attention, a day after talks between President Vladimir Putin and Slovak Prime Minister Robert Fico. Ukraine has said it will not be renewing a 5-year deal to pipe Russian gas to Europe, which is due to expire at the end of the year, as it does not want to aid Moscow's military effort. The flow accounts for around half of Russia's total pipeline gas exports to Europe, with Slovakia, Italy, Austria and Czech Republic set to be most affected if it ends.
Moving on to the top news in the energy sector.
The Spanish government has issued a decree extending a temporary tax on energy companies into 2025, Prime Minister Pedro Sanchez said on Monday, after lawmakers voted last week to eliminate the levy. The decree enters into force on January 1st, but it will need to be confirmed by Parliament within 30 days in order to apply throughout next year as the minority government intends, which may prove difficult to achieve as its partners to the left and right are at odds on the issue. Sanchez said that with the extension, Madrid was upholding the commitments made to its partners, as it required an extra effort from energy companies while at the same time introducing a tax incentive which takes into consideration strategic investments that are essential for decarbonization.
India's November crude imports showed Middle Eastern oil at a 9-month high while Russia accounted for its smallest share in 3 quarters, ship tracking data obtained from sources showed. The data showed the world's third biggest oil importer and consumer in November shipped in 13% less Russia oil compared with October at 1.52 million barrels per day, BPD, about 32% of India's overall intake. Some refiners reduced intake of Russian oil due to maintenance turnarounds at their plants and continued to lift committed volumes under annual contracts with Middle Eastern producers, an India refining official said. Next, we have the top news in metal markets. Copper prices edged higher in London on Monday, recovering from last week's fall below recent technical averages, though dwindling pre-Christmas liquidity kept them in a tight range. 3-month copper on the London Metal Exchange rose 0.1% to $8,949.50 a metric ton in official open outcry trading. The metal used in power and construction lost 1.2% last week as the dollar hit a 2-year high, making metals less attractive for buyers using other currencies.
Global crude steel production in November rose 0.8% from a year earlier to 146.8 million metric tons, World Steel Association data showed on Monday. Crude steel output from China, the world's top producer and consumer of the metal, rose 2.5% to 78.4 million tons in November, the data showed.
We will now look at the top news in the agricultural sector.
Sugarcane yields in India are declining due to last year's drought and this year's excessive rains, which could reduce the country's sugar production below consumption levels for the first time in 8 years, farmers and industry officials said on Monday. Lower than expected output by the world's second-largest sugar producer could eliminate the possibility of India allowing exports in the current season ending in September 2025, supporting global sugar prices. Maharashtra, Karnataka, and Uttar Pradesh account for more than 80% of the country's total sugar production, with lower cane yields in these states prompting trade houses to reduce their output estimates for the 2024-25 season. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.